Hello and welcome back to Global Value. In today's video, we're performing a fundamental stock analysis of Automatic Data Processing Inc., ticker symbol ADP. So ADP is a Dividend Aristocrat that is only 3 years away from becoming a Dividend King. Dividend Aristocrats are members of the S&P 500 that have consecutively increased their dividend payments for each of the past 25 years. Dividend Kings are similar in that they're S&P 500 members who have increased their dividends for each of the past 50 years. ADP has been increasing their dividends for each of the past 47 years. Currently, they're paying out a 1.8% dividend yield, which is just in line with what an S&P 500 ETF is yielding right now. But ADP is only 3 years away from becoming a Dividend King, where they would join select companies such as Coca-Cola, Procter & Gamble, and Johnson & Johnson. So currently, ADP is trading for $227.12 per share. Over the past year, their stock price is up about 11%. Over 3 years, they're compounding at a rate of 14% annually. Over 5 years, they're up at a rate of 15.5% annually. Over 10 years, that's also about 15% compounded annually. And going back prior to the global financial crisis, over the past 18 years or so, ADP has compounded at a rate of 10% annually. Keep in mind that this is not including their dividends over this time. So ADP is trading pretty snugly in the middle between their 52-week high and their 52-week low. They are a very large business. They have a $94 billion market cap. For background about what the company does, ADP is a provider of payroll and human capital management solutions, servicing the full scope of businesses from micro to global enterprises. ADP was established in 1949 and serves over 990,000 clients primarily in the United States. ADP's employer service segment offers payroll, HCM solutions, HR outsourcing, insurance, and retirement services. The smaller but faster growing PEO segment provides HR outsourcing solutions to small and mid-sized businesses through a co-employment model. ADP was founded in 1949 and is headquartered in Roseland, New Jersey. For our fundamental analysis today, we are going to be performing the Select 6 analysis, taking a checklist-style approach of 6 standard financial metrics to come to a holistic and beginning understanding of ADP based off of their business fundamentals. This analysis is an evolving process that will continue to improve and get better over time. It's a work in progress, and it's an opportunity to learn in public. With that said, let's get right into today's analysis. Starting off with metric number 1, we want their average return on capital over the last 5 years to be above 14%. There are a couple of reasons for this. The first is that over the long run, over the course of decades, a stock is going to return approximately what its underlying business returns, and these business returns are captured here by return on capital. The second is that the average publicly listed business only earns about a 7% return on capital. So by asking for at least 14% here, we can potentially build in some margin of safety for ourselves by only looking for businesses that are at least twice as good as average. ADP has produced phenomenal returns on capital over this time. From fiscal 2018 to 2021, they were extremely steady at right about 35 or 36% each year. That jumped significantly throughout fiscal 2022, and over their last 12 months, they produced about 56% returns on capital. So averaged out, ADP is producing a 40% return on capital, which is almost 6 times better than average. That's about 3 times better than the metric we were looking for. And so this is a massive check to start off here on metric number 1. Metric number 2, we're taking a high-level overview of the cash coming into the business. We want their revenues, net incomes, and free cash flows to have grown over the past 5 years. So over this time, their revenues are up. They've gone from $13 billion to about $16.5 billion. Their net incomes or earnings are also up from $1.9 billion to about $3 billion. And their free cash flows are up from $2.3 billion to about $2.9 billion. All 3 of these metrics are up, and this means that we have another check here on metric number 2. Starting off strong, 2 for 2 so far on ADP. Metric number 3, here we're taking the perspective of an individual shareholder in the business by looking at ADP on a per share basis. We want to see earnings per share growth over the last 5 years. This is building off the previous metric where we saw their earnings grow over this time. Indeed, it's been the case that ADP has grown their earnings over the last 5 years. By looking at the numbers here, their earnings per share have actually grown at a rate that's faster than their earnings. So this signals that ADP has been buying back shares over this time. ADP has bought back about 5% of their shares outstanding since fiscal 2018, which is fantastic as a long-term shareholder in the business, because when you purchase a share of stock, what you're really buying is a fractional ownership percentage in that business. And when a business buys back shares by decreasing the number of shares that it has outstanding, they're increasing your ownership percentage in the business, which ultimately increases the percentage of the business's profits that you're going to be entitled to. So not only has ADP been growing their earnings, they've also been buying back shares. So over this time, if you've been a long-term shareholder of ADP, you not only get to see profit growth, you're also seeing your percentage of ADP's profits go up as well. That can produce some pretty amazing results, especially when it's compounded over long periods of time. This is another great check here on metric number 3. Metric number 4 is very similar. Here we're looking for 5-year free cash flow per share growth. Again, their free cash flows are up over this time and they've been buying back shares. So this is another check here on metric number 4, and we are 4 for 4 to start things off with ADP. Metric number 5, here we want their net debt, which is long and short-term liabilities minus cash and short-term investments, to be below the amount of free cash flow that ADP has produced in the past 5 years. This will help us evaluate how the business is utilizing leverage. Currently, ADP has $2.1 billion of net debt, and over this time, they've produced $13.5 billion. So with just 1 year's worth of free cash flow here, they're able to pay off all of their net debt. So this is a great sign of a very strong and conservatively financed balance sheet. This is another strong sign to see on metric number 5, and this is our 5th check in a row. Finally, the big metric of them all, metric number 6, we want their average free cash flow to total enterprise value yield to be above 5%. If this is the case, this will give us a slight risk premium to the risk-free rate of the 10-year treasury and give us a reason to potentially be interested in the business at today's valuations. So we're using total enterprise value here rather than the business's market cap because total enterprise value is going to take into account both their market cap and their net debt position. So it's going to give us a more economically accurate picture of the business and be more reflective of the business as if it were a private company. Currently, ADP has a total enterprise value of $96.5 billion. We learned that over the last 5 years, they produced $13.5 billion of free cash flow, which means that in an average year, they're producing $2.7 billion of free cash flow. So when we divide their $2.7 billion of average free cash flow by their total enterprise value of $96.5 billion, that is going to give us an average free cash flow to total enterprise value yield of about 2.8%. So that's coming in below where the 10-year treasury is at currently. And so this is going to be an X on metric number 6, as they're not hitting both the treasury rate, let alone that 5% we were looking for. Also worth mentioning here is that over the last 12 months, ADP has earned slightly more free cash flow than this. They produced about $2.9 billion of free cash flow. So to get a current free cash flow yield for the business, when we divide their $2.9 billion of their last 12 months of free cash flow by their $96.5 billion total enterprise value, that gives us a 3% current free cash flow to total enterprise value yield. Again, still below where the 10-year treasury rate is at currently. So this means that metric number 6 is going to be our first and only X on ADP today. Then one of the main reasons we're looking at ADP is because of their strong dividend track record. So here we're taking a look at their dividend profile. Again, ADP currently has a dividend yield of 1.8%, and they've paid out consecutively increasing dividends for each of the past 47 years. However, it's really easy to make mistakes by blindly chasing either dividend track records or high dividend yields. Instead, it's much better to stop and take a look at the fundamentals of a business and make sure that their dividend is either supported by their earnings or their cash flows, depending on the type of business. ADP, it comes as no surprise that they've grown their dividend per share in each of the past 5 years. It's also great to see that they've increased their cash flows per share in each of these years as well. And over this time, they've been able to comfortably support an increasing dividend payment. If ADP is able to sustain their cash flows going forward, it looks like their dividend payments are in very healthy and very sustainable shape here. Again, just like any other business, as long as they're supported by their cash flows, which it looks like ADP has done a very solid job of doing. Then finally, here we're using a discounted cash flow model to come to a potential fair value for ADP, starting with their current free cash flows per share and then projecting a growth stage into the future over the next 10 years based off of their historical growth rates for their free cash flows over the past 32 years dating all the way back to 1990, then assuming a terminal growth stage over the next 10 years out from that, so going 20 years out into the future, where that growth rate more than drops in half, and they only grow their business at 4% annually. These numbers here for their growth rate are based off of their historical abilities to grow free cash flows. You have to do your own homework here to determine whether these historical growth assumptions are going to be applicable for the business going forward into the future or not. This just serves to give us a baseline estimate into the future, and through your own research, you're going to be able to adjust these up or down as you learn more about the business. So we're not going to be adding in their tangible book value because that is skewed negatively due to their share buybacks and how accounting works for share buybacks. So if we wanted a 10% rate of return from ADP today, then based off of their current stock price of $227 per share, it does not look like there's a margin of safety in the business. And based off of these historical growth numbers, again, which you need to determine for yourself, a fair value for the business would be a little bit over $106 per share. So the business would have to fall by more than half to be able to reach this fair value for a 10% rate of return going forward. At today's current stock price for ADP, again, based off these same growth assumptions, it looks like you'd only be earning about a 2% rate of return going forward from their current stock price compared to a fair value of about $240 per share. This would be including their dividends. So if this growth holds true, then you'd pretty much just be receiving their dividend payments over this time, and their stock price would be almost exactly flat over the next 20 years or so. Again, this is all based off their historical growth numbers, and you have to do your own homework here. This analysis is not financial advice, and it is not a buy or sell recommendation of any security. Before considering any potential investment decision, please consult with the properly licensed and registered financial and legal professionals. Instead of being financial advice, this analysis serves as a beginning and holistic understanding to help you determine whether it's worthwhile for you to dig in and learn more about ADP as a business. So in summary, Automatic Data Processing Inc., ADP checks the box on 5 out of 6 of our metrics. They're earning very high returns on capital. They've grown their revenues, earnings, and free cash flows over the last 5 years, and they've also bought back about 5% of their shares outstanding, so their per share numbers are up as well. That's great to see that those per share numbers are up, coupled with their very high returns on capital. Then, the business does not look like it is utilizing very much leverage at all relative to their free cash flows. They'd be able to pay off all of their net debt with only 1 year's worth of free cash flow. However, based off of their current total enterprise value, it looks like the quality of their business is reflected in their stock price, as both their current free cash flow and their average 5-year free cash flow yields are going to be below where the 10-year treasury is at currently. Then it looks like the company's dividends are healthily supported by their abilities to produce free cash flows. And if the past is going to inform us of the future here, that ADP should have no trouble hitting the mark of becoming a dividend king and increasing their dividends for each of the past 50 years. Again, they'd be able to do that by 2025. Then finally, performing a discounted cash flow analysis of ADP, it looks like if you want a 10% rate of return going forward on the business, that based off of their historical abilities to grow their free cash flows, that you'd have to wait for this company to fall by more than half, and that today's prices, based off of those historical growth numbers, you'd only be able to expect about a 2% rate of return going forward, which would be pretty much captured by their dividend and any dividend growth that they'd have over this time. It's worth reiterating that those are historical growth numbers and that they serve just to give us a baseline estimate into the future. Candidly, they are not necessarily going to be accurate for the future of ADP. However, they give us that baseline, and they are one potential possibility for the company going forward. But the growth rate of most companies slow down as they become larger and larger. Again, this analysis is not financial advice. Instead, it serves as a beginning and holistic understanding of ADP to help you learn whether it's worth your time to dig in and learn more about the business. If you're interested in learning more about ADP, I'd highly recommend starting with the company's filings. You can dive into their historical 10Ks to get a history of the business and its operating results. Those 10Ks will also lay out potential risks that the business faces, and you'll get a sense of both the challenges and potential opportunities that the company faces in both their current environment and what they think a potential outlook for the business would be. Importantly, you'll also get an understanding of both the character and the competence of management overall, especially when it pertains to capital allocation. When you're done reading through their 10Ks, I would also recommend reading through their 10Qs and reading through some of their recent earnings call transcripts to get a better quarter-by-quarter perspective of the company going forward. As a value investor, you ultimately want to research a business as if you're going to own 100% of it, and you can come to truly understand the essence of that business and understand what matters and what does not matter for the company, ultimately coming to your own estimate of intrinsic value for the business, and then you can determine for yourself whether there's a potential margin of safety or not, based off both the qualitative and the quantitative aspects of the company. So with that said, that's it for today's fundamental stock analysis of Automatic Data Processing Inc. ticker symbol ADP. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Thanks for learning about ADP with me, and have a great day.